So what this tells me is like you can have the best product in the world, right? The best communication in the world, and you walk into a country like Pakistan, and what it really shows that there's a lot of frustration in the market. Not necessarily with us or with Kareem or with any of these other providers, but there's frustration in the market because I think consumers have been ignored for a really long time.
And on behalf of Gaurav and myself, welcome to the 10th. Yes, that's right, the 10th episode of Fintech Founders. It just feels like the other day that Gaurav and I kicked off this series. We're Zooming live this afternoon from sunny Dubai. And it's a real pleasure to have Jordan, who's woken up and got himself ready at an unearthly, ungodly time in the morning in Texas. So good morning, Texas. Jordan,
good morning. Good morning, Dubai. How is it going, everyone?
Dubai's awesome as ever. From one desert to another desert. So great to have you with us. You've got an amazing story. I mean, I love to hear how, you've got involved and, Gaurav and I are super excited about what's happening in Pakistani Fintech today, but you've been involved there for a while, right? So tell us about your personal journey into A, Fintech, and B, how does a guy from the US end up in Pakistan building a Fintech?
Yeah, look, it's a crazy story. I always like to say, up to 5 years ago, I never even knew what venture capital was, right? I grew up in a small town, middle of nowhere, New Mexico, another desert. My goals. No, it's just crazy. I went to a state school. My goal in life was to move to the big city of Albuquerque and be a general manager at a Macy's, right? Like that was my vision. That was my life's goal. And, I got out of college. Even for the first year of college, I was really happy working at the automotive shop that I was working at. Had a college degree, was making decent money, had a roof over my head, and I was pretty happy. And I saw my best friend move out of state for the second half of college. And I was like, look, I need to get out of here. I don't know what I want to do or what I need to do. And this was, back in 2013, literally the bottom of the 2008 crash. I applied for 200 plus jobs, and finally got an interview at a few places. And I got a job in Texas and, got the job offer as I was boarding the plane to my honeymoon. So I made the move out to Texas. And then I actually didn't fall into payments organically. I actually started a fleet management company as an account executive. And what really piqued my interest into payments was there was this fraud case with essentially a corporate fuel card that occurred, and that just for whatever reason something went off in my brain, and I was like, this payment thing is cool. I want to do something more in this payment space. I didn't know what. I just knew I wanted to get more involved.
I'm sorry, you have to stop right there. Did you just say payments is something went off in your head and you said payments is cool?
That was a statement most people didn't make, especially 10 years ago.
Sorry, I had to cut in. That's that's a T-shirt that's gonna have your autograph on it, I think, and I'm just gonna walk around and go, this guy said.
That's a good idea. That's a cool idea. Yeah,
it's just shocking, but that's cool.
Oh, look, fintech wasn't sexy back. I mean, it's still not as sexy as it should be. But I mean, it's.
That's for our next podcast. But tell the story. I derailed you.
I know, how sexy should payments be? But that's like
no.
Yeah, we're in Texas. We're in Texas.
We're in Texas. Honeymoon plane, and you thought it was cool. Let's go back there.
It's wild though, how things change, right? Back then I told everyone, I was like, look, you should get in. It's a really cool industry. It's there's a lot of things going on, a lot of movement. And now it's, this huge, most VC money goes into fintech, right? Not just in emerging markets, but in the US and in Europe, there's you have Chime, you have Florida, Afterpay, Affirm, Zip, all these massive players drawing in massive VC funds and doing massive volumes. And it's really cool to see all of this happen. But I think, what occurred is I started going down my payments journey. I started doing utility bill payments with government entities. And then I dove into a company that did software development for fintechs. So I got a really technical understanding of how authorization works, issuing works. We built private label credit card platforms from scratch, gateways from scratch, did EMV certification. So I got a really, really technical understanding.
Were you coding? by the way?
No, I actually was brought in as a sales engineer, and within 6-7 months, I was promoted to director of sales, and decided this sales thing is in fintech. I don't know what was called fintech at the time. Was something that I want to be involved with, and so I went through that, had a good time. Started at Klarna when they launched Pay in 4. So I was on their enterprise merchant acquisition team. And that was when I really, really got into what we're doing. And I was talking with large retailers across the country, like Forever 21, GameStop, our Backcountry, Revolve Clothing, a number of other large retailers. And I realized that all of my expertise in payments and all my technical understanding in payments was directly related to e-commerce. So in payments, we'd always talk about friction, right? Friction is this pain point for consumers, and how technology can help reduce that friction. And what I realized is that if you understood payments on a deep level, understanding e-commerce was much easier in terms of the pain points that retailers face every day, because it's all the same thing. It's friction, right? Better conversion, less friction. That's ultimately the North Star metric, right, for most people. And so I went and then became a VP of sales at Charge After, and Charge After is a buy now, pay later aggregation platform for waterfall financing specifically. It's a waterfall financing company. And then we started off in QisstPay in Pakistan for buy now, pay later. That was roughly 9 months ago. We went in and said, hey, this is looking, no one was there. There's some people doing buy now, pay later, trying to, and no one was really taking off. And I said, look, I think they're looking at this in the wrong lens. Everyone I was talking to was like, a buy now, pay later in Pakistan. Why even in Pakistan in general? Why do anything there? And I said, look, India, this is India 5-10 years ago. LATAM's too expensive. Africa's too expensive. India's getting too expensive. US is definitely too expensive. People are going to be looking to invest in other places. And because there's globally, unfortunately, there is a negative stigma that comes along associated with Pakistan. I think is unfounded. I was like, this is a perfect opportunity to go in here. So we went in, raised some money. Now I think we'll be 2,000 brands probably by next month that we've signed. So Samsung, Dell, Ashley's Home Furniture in Pakistan. We also have Philips, Diesel to London. We have some of the largest brands in the country, like ELO, which is the largest one of the top 100 largest Shopify brands globally. We also have things, our companies like Uniworth and Sapphire, and many others. And a few months ago, we ran into a scenario where we said, look, we are basically becoming a middle layer for communication with consumers and retailers. Like, people reach out to us, I have this issue with this merchant, you need to help me. It's like, we're a payment method. Like, would you call Visa and MasterCard to, resolve your issue with the merchant? But what we realized was that people need an outlet for this, right? And so we get reviews on the Google Play Store, and Apple's are like, oh, QisstPay is a scam. They won't refund my money for 15 days. I'm like, it's the bank, it's your issuing bank. Like, we've set the refunding process. We've done everything we can. And what we realize is we're just this communication layer. We're building trust, we're building infrastructure. And so we decided to launch our one-click checkout platform. And this one-click checkout platform, in essence, is a communication layer for every payment method, not just buy now, pay later, but payment processors, cash on delivery providers. Companies like EasyPayza and Nift have also partnered with us, and we're providing this communication layer for merchants and consumers to transact together. And once again, reducing the friction, increasing the conversion. So, we're transacting, we're hitting thousands of sessions a day on this new platform, and it's absolutely crazy to see the growth. Has some growing pains, of course, when you launch a new product, but we have signed about 400 or 500 retailers so far on this new platform in a matter of months. Now we're working on bringing them all live, and we actually launched in the US a few weeks ago, and that's a whole other story of kind of how we got to that point. But
we got time.
yeah, it's
we
a
got
wild
time.
journey.
We got time to get through that too.
why don't we get Gaurav in, because I know he's chomping at the bit. He's probably got lots of detailed product questions and payments and BNPL and Pakistan. So just before I hand over to Gaurav, a reminder to the audience, if you listen to this live or in replay, this show goes out on all your favorite podcast channels. So do subscribe, hit the subscribe button. It's on Spotify, it's on Apple, it's on YouTube, it's everywhere you want it to be. So do subscribe and listen. Gaurav?
Brother, thank you for the handover. You know, it's pretty interesting. A couple of quick things before we start drilling down into, you know, the product segments and things that you're doing to differentiate. And this crazy movement from sitting in Pakistan where people would, I've never seen a company from Pakistan jump to the US, not recently, not to my knowledge. Maybe there have been, someone out there will happily correct me and educate me further, but what? Like, but before we get there, you know, you talked about this timeline from being shop, working literally in repair, automotive type of scenario, going to working with some of the biggest names in BNPL in stages. How long was that part of your life? How many years was that? I'm curious.
So I graduated college back in 2012. And so it's been, you know, it's about a decade now. You know, that it's been a wild journey. But I mean, even with QisstPay, we've only been around. I mean, we've been legally incorporated for a bit longer than that, but we raised our first formal round of funding back in May of last year. So I mean, we've only been around 9 months. And it's kind of wild, you know. And then we look at, you know, fundraising, you know, people are constantly trying to, you know, I've had to turn down several people, as some people may know, at certain rounds because we've been oversubscribed on every round. But it's, you know, you know, when you come to this piece, you know, people are, you know, they're seeing the vision of what we're doing and, you know, seeing how fast we move. And it's pretty exciting to know that, hey, you know, we just kind of pull the trigger. And that's how we do everything in the company. Some people love it, some people hate it, but we act first before strategizing. And I think that's a big testament as to why we were able to move so quickly.
So, you know, you have 8 years of experience under your belt, and then after 8 years of experience, you jump onto this, you know, one directional wagon saying, I'm going to bet on Pakistan for BNPL. But when you walk into that market, is it just normal BNPL? It's how do you do? Hello, I'm BNPL again. You know, let's set this up. And, you know, it sounds too simple. Working from sitting out of Texas, going in there, building trust, building an image, delivering, executing. I mean, how many people did you start with, and how many people are you today?
I mean, we're 100 plus people now. I mean, it's
in 9 months, we've onboarded 100 plus people.
Yeah, and we started just a small group in single digits before, you know, and it's I think what's interesting is when you look at it. I mean, we have a neon sign that has ideas are a certain, you know, word that I probably can't say on live podcast. But you know, it's sitting in our office, and you know, it may discourage some people, but it encourages the right people to say, well, what does that actually mean, right?
So,
and it's all about the execution, right? I mean, I want to do a BNPL, right? And it's when you're looking, and I think this is true of any startup, not just in Pakistan, right? But it's understanding, bringing the right people in, building an ecosystem, and you know, kind of delivering what you're saying you're going to deliver on. And look, it's not easy, right? The execution is the hardest part of any business. It's
right. A pitch deck's just a pitch deck. It's words on paper. The work is what needs to be done. But tell me about, did you just literally copy paste normal BNPL and say, we're going to experiment BNPL? I mean, were you doing anything different right from the outset, or you're like, listen, let me not experiment too much right from the beginning. Let me build basic BNPL and go from there. I mean, tell us about that evolution of product.
The product evolution is really interesting. So we started off with Pay in 2, which was, you know, we got a lot of comment. Hey, this is great, but it's not quite incentivized enough for me to do this, right? And so like a lot of other BNPLs, we modified based on the country. So most people in Pakistan get paid monthly instead of biweekly. In the US, it's, you know, Pay in 4, which is 4 biweekly installments over 6 weeks. For us, we went Pay in 2, then Pay in 3. We decided to end up paying 4 over Pay in 3 because we felt it was a major differentiator to be able to extend lines of credit over 90 days. And so we had this evolution and based on consumer feedback to saying, hey, this is what really gets me across the line, right? So in some retailers, and I think there's also one of the things that people have to realize is, we, from a product evolution standpoint, we were really, really big on getting government approval for what we were doing, especially in an Islamic country, right? We are the only licensed buy now, pay later company in the country. And essentially anyone else doing it is essentially operating illegally. And the government entities are aware about this. And because we did it takes a lot of time, a lot of work, and a lot of resources to be able to execute on this license. But we thought it was really important that because we're lending money, right? We are, even in short term, and it's not traditional lending, right? It's in a lot of ways, it's not lending. I say lending on the air because it's the most simplified way to explain it. You're essentially factoring invoices, which is much more accurate description of what BNPL is. But in terms of what we're doing today, it's really important that we work cooperatively with the government and we actually encourage their intervention. Because the last thing you want is for the government to make a decision randomly out of the moment and be like, all right, anyone who doesn't have this is shut down for the next 6 months.
I'm going to reel you back in about product, because I know we were talking about government and licensing, but I just need to know, so you did 2 and 3 and you did 4, and then you moved across. A couple of things, how did your product evolve from there otherwise? And can you talk a little bit about data and default rates?
Yeah,
because
so
BNPL didn't exist before. Were people tempted to do a lot of default rates? Was it very high in the beginning, or was it very low in the beginning? I mean,
yeah, it was very low at the beginning, but also when you have less transactions, it's harder to get like a good view. And obviously, transaction rate, default rates can easily be double digits, right? Especially in emerging markets. But when our fraud system has evolved like none other. I mean, we have a pretty sophisticated scorecard that we use to essentially, prevent customers that cannot repay, right, from spending with us. And there's also a lot of confusion around that, I think, in the marketplace. I think, especially in emerging markets, consumers get really, and you talk about product development, right? Communication is super, super important, because when you are essentially going out there and saying, I'm a payment method, we want to improve you, but we can't, right? That's a difficult conversation to have with a customer, especially when you can't be there physically in front of them, right? So having that level of communication is important. Look, we get customer service tickets every day, like, oh, I got this bug on your system. I mean, I don't know how many of these we get a day I was declined. It's like, no, we declined you. Like, we can't approve every single person that wants to use our platform. And, sometimes I think one of the things I found really interesting in terms of product development is in Pakistan, if you look at the overall ratings of apps in Pakistan, they tend to be significantly lower than other parts of the world. And even if you look at, companies like Careem as an example, you look at their app in the ratings averaged out in Pakistan versus other countries, it's significantly lower, right? So what this tells me is like, you can have the best product in the world, right? The best communication in the world. And you walk into a country like Pakistan, and what it really shows that there's a lot of frustration in the market. Not necessarily with us or with Careem or with any of these other providers, but there's frustration in the market because I think consumers have been ignored for a really long time, right? And I think if you can address that issue with good product development over time, with enough people doing it, people will kind of get past that hump. But it's a difficult hump to get past. And I think a lot of people don't understand going into Pakistan as an outsider, even as an insider, how detrimental that can be to developing a product, right? I mean, I think we probably spend 20-30% of our product development strategy around customer communication, more so than anything else.
Very interesting, perspective on how to actually go out there from the interaction with the customer being essentially not in presence. Yeah, it's a nice way to look at it. I mean, I'm going to hand back to Ronit, and just before I do this, one thing I just wanted to understand is, from the 150 people you have, how many people of those are software developers, and do you build all your own tech in-house? That's it.
Yeah, so we have, I think, probably 20-30% of those at least are developers. And then obviously developers for DevOps, SQA.
Yep.
Right. All that. Probably about roughly a third, give or take. We have a lot of people in customer service, I mean, the amount of we get thousands of customer service tickets a day, which is crazy, right? And we continually improve the product, continue to improve the communication that happens. But I think once again, people just need that communication outlet. It's a huge, huge need that you just don't see in, many other markets, which has been a really interesting learning for me. But I think when you look at, the tech side, there is no PayPal we can pull from. There is no Klarna we can pull from. Like, we are building the first. So, I mean, a lot of people, will come in and be like, this is just too crazy for me. Like, they don't understand the startup type of world. Full transparency, we had to developer leave because like, there's no documentation or anything. I'm like, look, this product's 9 months old and it's changing literally every day. Like, we have basic documentation of how it functions and how it flows. But as a startup, your product changes multiple times a week because you're constantly trying to create this best product. We're not a 10-year-old company with a legacy product that changes once a month, right? And so I think that's another thing going into emerging markets, which is a big learning for me as essentially as an outsider, was that here you're kind of used to that, right? You see, I mean, I've been in companies that have 400 people that have almost no documentation. They have external documentation like FAQs, customer support docs, which we have that, but having detailed to the T technical documentation is, that not having that it's part of a startup, right? I mean, we work to improve it every single day, but I think having people that understand the speed at which we go it's unusual for the region, but it's getting there. Pakistan the startup ecosystem is evolving like this. And so we take a very big pride on, we typically don't take people from other startups. That's another thing I like to point out is when you talk about building ecosystem in emerging markets, we've had many people from all the other largest, large startups come in and, want to work with us. And we typically decline those people, especially if they're on an executive level, because, building a startup ecosystem, it's so dang important. And I think people don't put enough emphasis on that when they're growing.
Ronit, back to you, brother.
Jordan, super interesting about building in Pakistan. Can I just take you back a couple of years and could you go back to that jump into Pakistan? I'm still like sitting here going, how did this kid from New Mexico via Texas end up in wherever, Karachi, Lahore, Islamabad? I mean, I still don't understand. How did that happen, man?
Yeah, I mean, I had an investment in a software house, and it was a small software house. I mean, maybe a dozen people. It was nothing massive. Yeah. And that was it. I mean, I didn't know any big retailers. I didn't know any big government entities. I literally just said, I think this looks like a cool market. Let's just go do it. And I did it. I wish I could give a more elaborate journey like in some of my other responses, but
we want the real unvarnished, story, because the world is full of people who sort of paint pretty pictures looking back. So you had an investment in a software house in Pakistan.
Yeah, and that was it. I mean, which
year was this?
What was that?
Which year was this?
I had it for a couple of years.
Right.
And so, I mean, I had a relationship with my co-founder who was, the founder of that company. And, but like I said, he also didn't come from some crazy university. He didn't go to LUMS. He didn't go and work for Duraz first. We kind of just sat down together and said, look, let's just do this. I think this is a good idea.
Wow. Now, talking about jumping countries, I believe QisstPay has already expanded into Bangladesh or is thinking about it. Talk a little bit about that expansion.
Yeah, so we've hired some people there. We look at it as what I like about emerging markets is the cost to deploy capital there is a lot less expensive. So you can hire 5-10 people, kind of experiment with it and, see how it goes. And I think Bangladesh is gonna be a really good country. We are primarily going in there with our one-click checkout platform, which is our flagship product now and is actually accounting for the good amount of traffic compared to BNPL. I think it'll overtake it next month. And so we are going there with multiple products into that market. And Bangladesh is interesting. So it's a little bit more developed than Pakistan in terms of ecosystem.
It developed in what way?
So I mean, look at just even a GDP per capita, right? GDP per capita is significantly higher. right? Startups have been there a little bit longer. You have companies like Sequoia that have, already invested into the region. And so smaller country. But as you know, Bangladesh and Pakistan used to be part of the same country. So there's a lot of like the same legal structure. Kind of everyone has a cousin in Bangladesh sort of thing, right? And so there's a lot of similarities. It's a very easy transition. And for me, I think that the upside in Pakistan is just significantly larger. Like, obviously there's a lot of growth happening in Bangladesh, and it's another rapid growth area. And I'm really excited about it. But Pakistan is, we have our roots there. We want to be one of the first unicorns out of Pakistan, and I think that's a big focus for us.
Awesome. We got our tagline for the podcast.
Yeah, see, there we go. I love it.
There we go. There's a nice diagram behind your gamer chair.
Literally sitting on his head like a crown.
Yeah, it's right behind you all the way through. I'm wondering what it says. That piece that you stuck on the wall, like, what does that say?
Looks like a marker board.
Yeah.
Yeah, it's just a whiteboard. Yeah.
Is that your strategic route map or?
Yeah, so we recently redid our tech team organization. So that new structure went live this week, and so we were just making sure we had all the right teams set in place, because as our tech team grows, we need to restructure to a more Western style of organizational structure within the tech team. Once again, not talking about things that, a lot of people who are familiar with more monolithic structures. Once again, we're trying to bring a lot of, maybe structures that are more regular in the GCC and in Europe, and in the US to Pakistan, because they've been proven to be effective. So constantly restructuring, constantly moving people around, and trying to figure, because when you're growing this fast, you do something perfectly in one day, and 3 days later it's out of date already. So it's
yeah.
I mean now, Ronit, I think we're approaching that time. So just before we do, you haven't even gone full circle yet. You haven't had enough time. You've just gone back and forth. So if I would say the context of that is, you started out in the US, you've gone to Pakistan, you're going back to the US. What? Tell us about that part now.
Because Pakistani tech is phenomenal. There's great engineering talent there. You have a great cost arbitrage opportunity. The US is a big market, and I know it extremely well. I have a very large retailer network personally. And the payments ecosystem there is fragmented. So we're not doing buy now, pay later in the US. We're only doing one-click checkout. But our one-click checkout is an orchestration tool. So ultimately what we do is we say one integration, access to all these different payment methods, not just access to them, but we give them A/B testing tools to compare who is the most effective payment option in their checkout. So you can say, I want to compare payment option A, payment option B, do a split of 30% to them, 70% to the other, and actually measure how that affects your conversion, how it affects your bottom line. And it gives a lot of power to the retailer. So there's a big need for solutions like this in the US. And, we're planning very much on taking advantage of this need and, blowing up quite heavily. We're excited.
But Jordan, does the US need another one-click checkout provider?
There's really, look, there's really only one major one at the moment. You have companies like Fast who get confused with us. So Fast is not actually a competitor. Fast is a one-click payment option. We are a checkout option. So we replace the checkout rather than being a payment button. By the way, Fast, phenomenal UI. Dom has done an awesome job over there. And I think it's a pretty cool solution, but look, their solutions are a very specific need, and their tools are great. For us, we are more of think of it as an RFP replacement. Imagine as a retailer, you got 10 payment options coming to you saying, we're the best, we give the best approval rates, we have the most uptime. You have no way of actually checking that today without integrating all 10 of them. We give retailers the ability to integrate us one time, and then through our application, our platform, they can test what they say and actually see what their approval rates are, what their decline rates are, and essentially optimize the checkout. Because if you ask a merchant today, any merchant, you said, what is your average time of completion checkout? Very, very few would be able to tell you. You said from step 2 to step 3, what's the average time? What's your average drop-off rate from step 2 to step 3 in your checkout? They wouldn't be able to tell you. We go to that fine level of detail, and we look to measure all of that.
Jordan, we're running out of time, so maybe one last question to help us sum up this conversation. It's 2025. What does QisstPay look like, and what are you doing?
Yeah, I mean, assuming we're not acquired for some crazy amount of money, we are, by then we'll be. Look, I think we'll be a unicorn by then, without a doubt. And this is based off of our sales pipeline. Based off our sales pipeline, things are looking really solid. Based on our rapid product development and deployment, it's looking in the right direction. We hope to be in multiple countries, not just US and Pakistan, Bangladesh, more. I really hope that we'll be, one of those names that you see in a lot of articles saying, hey, QisstPay's here. We're already going to, 3 conferences in the US. We're going to Merchant Risk Council, eTail West, and Shop Talk. So we're hitting every single conference that we can hit up. And so I think you're going to start seeing the QisstPay name a lot more regularly, both in the US.
Jordan, thank you so much for joining us. It's been a pleasure to talk to you and listen to your story from New Mexico to Pakistan and back again to Texas, USA. It's been a pleasure.
Thanks so much for joining us, brother.
Hey, thanks for having me. Appreciate it.